Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive in, take a look, see what people are sharing. If you want to follow me at _finance, and if you want to join our community, finding-value.com, I go into all of these topics, subjects, looking for potential investment opportunities. I also share my opinions freely about individual companies. I also will respond to questions if you guys have questions. I cannot do one-on-one coaching or anything like that. I'm not licensed to do that, but I can share my opinions. I can share the companies that I'm finding, and you guys can ask questions about the markets and that I can share my opinions on. We do have a special going on. Special is the coupon code, 50% off the first month only, and a larger discount for the yearly membership. And those monthly members that want to switch to a yearly, you can use that coupon code for further savings. Willem Middlecube says, we just started, guys, long and strong. And this is the type of charting I like to look at. Big long-term up move from 2000 all the way to 2011. The consolidation is the cup and handle. So the consolidation is the cup and the handle, and we've broken out of that consolidation. And we are now continuing higher. He says on this log chart, it is obvious that gold has much further to run. Why not, given that we are headed into, in his opinion, a hyperinflation? It could be very high rates of inflation for a very long period of time. So when I look at this chart, I go, oh my God, we have a long way to go. And it's not like I didn't know this. It's not like this chart was the one that sparked the, oh my God, we're going to go big. There's other charts out there that sparked my, oh my God, this is going to go big. It's not just gold. It's everything in commodities that are bottoming out. It's the ratios where the equities are so overvalued in relationship to commodities. That's what's going to be the fuel. It's the gold to M2 money supply. It's mainly rooted in the ratios where I look at things and I say, oh my God, this is all mispriced. It is so mispriced. And everyone has jammed their money over into financial assets. Then the question is, well, why are financial assets going to get rotated out of? Interest rates is going to cause the move. And we've broken that 40-year downtrend. So think of it this way, guys. Gold is the leader of this big move. Gold did crazy things in the 1970s, along with all other commodities and hard assets. The decline of interest rates from early 1980s all the way till 2020, which was the bottom, that forced everything into financial assets over that 40 plus year period of time. The thing is, this doesn't rotate on a dime. It takes a lot of time and a lot of bottoming in the process. People are conditioned in this world to think that financial assets always go up. This 60-40 portfolio, it's going to get smoked. Why? Because it's bonds and stocks. It's all financial assets. What's coming, in my opinion, and the main driver, one of the main drivers, is going to be inflation, interest rates, and lack of supply of commodities. They are all interconnected. Gold is going to be the safe haven asset, and it's going to replace bonds. And the money's going to rotate out of bonds. Eventually, stocks will also have their hiccups along the way. They're not going to go straight down, and they're not going to go straight up. They're going to have sideways actions for a decade, maybe even longer. And money's going to start to look at hard assets and precious metals differently. That's the paradigm shift. That's what this chart is representing. Breakaway, Clarkson's. It says, looking forward, we expect Brazilian iron ore exports in second quarter of 25 to fourth quarter of 25 to be stronger than last year, supported by Vale's restart projects. In addition, bauxite shipments out of Ghana have started their year with a staggering 67% growth compared to the same period last year. With our data suggesting 21.3 million tons has been exported so far, all in, we expect the usual seasonality to kick in once we're past the first quarter and expect rates to increase significantly over the year. So that's their opinions, and you've got dry bulk shipping around iron ore and all that other stuff. David Burrows, he says, a further break lower in the DXY, which is the US dollar index, should be supportive of global stocks and commodities. It is also an indicator of appetite for risk assets in general. So this is the DXY breaking down. This will be the driver of a lot of things. It will be the driver of emerging markets. It will be a driver of money out of dollar-denominated assets. This also here is kind of a topping pattern, perhaps. So we'll see what happens. We'll see if we get the big move lower in the DXY that some people expect. I'm looking for a lot of these commodity currencies to outperform. So I think emerging markets will do incredibly well. HFI Research says, here are two interesting charts I want to share with you. Again, I think the consensus is completely missing the boat on this. But fear not, they will catch on soon enough. Crude oil production growth is indexed to 100 versus associated gas production growth. Do you see the trend? Low trend in oil production. And then if you go over to nat gas has been increasing above trend. If you look, so oil, the trend has been sideways, and we're down a little bit in 2025. The trend in nat gas has been growing and upward. So we're getting gassier and we're producing less oil. That's also one of the reasons why I focus more on oil, because I think we've got problems in the oil patch, so to speak. Shale oil peaking in oil production, and then we're going to get a lot gassier here. I think the world's going to peak in oil production probably 2025. So we'll see what happens, and that's kind of what a lot of people are calling for, that look into this quite deeply. A few people, not a lot of people, but there's some insiders, maybe a handful of insiders saying this, and Goring and Rosenzweig are talking about oil specifically, and then maybe even nat gas rolling over too, but I'll hold my judgment on that at the moment. Global oil supply is on track to increase by 1.6 million barrels per day to 104.5 million barrels per day in 2025. The Americas are leading in production growth. Energy Headline News says unlikely. I agree. I don't think so. The IEA, I think, is wrong here. I think it's wrong. Maybe if they continue to add natural gas liquids in there and count it as oil, but I think oil's done. Like I think we'll see a rollover here that this year or next, and then oil is going to go way up. And then, I mean, oil is used in a lot of stuff, guys. This isn't like, people have no idea what oil is used in. It's used in everything. Every time you drive your car, you are in an oil-soaked car, which is all plastic. It's rubber tires, which is oil. All of the stuff with the car is oil, the lubricants, the adhesives, the things that hold it together, the plastic washers. I mean, it's all oil, guys. You drive on concrete and asphalt and stuff. It's all oil. It's all heavy oil. All of it, everything. So you're in an oil car driving on oil tires on an oil road in clothes that were delivered with oil and probably grown with oil and the machines and equipment that had oil. I mean, it's everywhere. It's ridiculous. Coming up, here's Albert. He says, breaking Costco under significant delay fulfilling orders for gold and silver products. Costco has not seen this volume of purchasing on a product since releasing the Kirkland Signature golf ball in 2016. Emails will soon be going out asking customers with unfulfilled orders whether they wish to keep their order or cancel it given the current delays. So we're going to product shortages next, perhaps. Now, some people will say that gold and silver will always be attainable. It just depends on the price. Some people say, well, maybe we'll reach unobtainium. I have no idea, guys. I really don't know. And it doesn't matter to me. I don't think dwelling on if something will go unobtainium at some point is going to be good. The question is, what are you doing today and what actions should someone take? If it was me and I wanted gold and silver, I would probably buy it. I wouldn't wait. I wouldn't try to time a pullback in gold or a pullback in silver here because, I mean, they've already broken out. They're already rolling higher. So I just buy physical and I hold on it. Now, I'm not saying anyone should do that. It should always be, consult with your financial advisor, do what you need to do. But that's my view on it. And if we can't get it in the future, oh well, at least I bought enough and I feel good enough about what I purchased when I could. I did what I could when I could. That's all you can do. Cube 2.0 says, it's like shale's rise. Look at 2014. It was obvious that its rise was a massive problem, but oil stayed above $100 a barrel until it decided to care. Then it was $30 a barrel before you could blink. Same thing will happen in reverse. When year-over-year numbers start showing a solid rollover in terms of shale oil. And down here he says, part of me cannot believe no one in the general market realizes shale has peaked at these prices. More sensible part of me knows that this is the way it has to always, or that it was always going to be. No one will care until the packed theater is really on fire and only one man door is working. Only one person can fit through the door is working. So when everybody tries to rush out, they're going to be stuck. So I think that's probably the case. Yeah. And here's JSG commenting on that. He says, here's what commercial petroleum stocks did versus WTI from March 2014 to December 2015. It's pretty much a straight line up for commercial petroleum inventory. WTI followed suit and was pretty much a straight line down. Let's see the opposite happen now. So what I'm doing here and what the purpose of showing you this and going over this is inventories are linked to price. Sometimes they don't move immediately. They get delayed and people get comfortable where the price is at and they don't take action. This was at $100 a barrel back here. And inventories were going up in 2014 until price really started to take off to the downside. And inventories kept going up and up and up and up. So that's commercial inventories or commercial stocks, is what they call it. And WTI was at 100 and went all the way down to $30-something a barrel. We are in the inverse situation right now. The inverse situation right now is that we've got commercial inventories that are coming down, 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 down. We continue to draw back on inventories. And the price is just sitting there at about $70-something a barrel, oscillating around. No one's going to care until they care about it a whole bunch when inventories hit some sort of critical level and price just rockets higher. Now, here's the thing. The whole inventory has been drained. What does that mean? Commercial stocks is just the end product. Think of it as like the end product of oil being delivered there. So that's close to the end stock. It's not gasoline inventory, but it's commercial inventory of oil. Then you go backwards. You have your drilled uncompleted wells. You've got your drilling and the rig count and all this other stuff that's drilling the drilled uncompleted wells. And you've got the frackers and the finishing of those drilled uncompleted wells. All of that inventory is being depleted behind it. So when we do see a move, the price can come up, but it's not like we've got a whole bunch of drilled uncompleted wells just sitting here saying, oh, we'll just turn these all on. The inventory is being sucked out of the market completely. Then your drilling rigs are coming off. So your rig count's dropping. And then they don't just bring those rigs back, guys. They have to prepare them. They have to get contracts. They have to do all of these things that take a lot of time. So some of these rigs aren't going to be coming back very soon. They're going to get stuck. And that's when the price is going to go up because we're eating through inventories and the market just doesn't care at the moment. JC Parrott says, we're seeing broadening in participation among equities across the globe like nothing we've seen in a very long time. Countries like Spain are breaking out and completing these huge bases is not evidence of weakening breadth. LOL. Do you know what that's evidence of? It's evidence of your dollar about to go down and their currencies are about to go up. It's money rotation, capital rotation. So you're seeing these big patterns break to the upside because capital is going to start to leave the dollar market and go towards other currencies and emerging markets, Spain being one of them. Offshore drilling to increase in 2025, barely. If you listen to a lot of the conference calls, 2025 is going to be kind of a flattish year. And then you're going to see, I think, growth beyond 2025 because oil prices will probably go up. So I think 2025 will be the year of a big bottom. Does it mean that we'll bottom now, bottom in quarter two, bottom in quarter three of 2020? I'm not sure there. Depends on the company, depends on how they're doing, depends on the contracts, depends on a whole bunch of different things. But I'll just say in general, 2025, I think will be a big bottoming year for a lot of the energy service companies, offshore included. Rock Bottom Entry says, Platinum is breaking out of a 17-year consolidation pattern. This is a generational buying opportunity. Well, he's got that right. It's generational buying opportunity for platinum, but it's also a generational buying opportunity for silver, for gold, for oil, for copper, for all sorts of commodities, for emerging markets, for Chinese equities bottoming, for all of it. It's all linked to the dollar. These are priced in dollars. So platinum futures priced in dollars is about to go vertical. Well, why? 1 ounce of platinum is 1 ounce of platinum. Is it harder to mine platinum? No, the price is too low. We're below the cost curve for platinum group metal, the trio of platinum group metals. So what do you think supply is doing? It's cutting back. It's too low. We're going to see a highly inflationary period come right in front of us. All these big patterns are going to get unleashed to the upside. All of them. You think it's going to get cheaper? No, it's going to be horrible for people who aren't prepared for it. And again, on the website, I go over opportunities to make money from this exact situation breaking out, from gold breaking out, from silver breaking out, from oil and energy service companies bottoming and all this stuff. Now, energy service did an ultimate bottom in 2020. That was your bottom of all bottoms. Now we're putting in the higher low bottom, the wave 2 bottom. Gary Savage says that dollar is just about to confirm a failed daily cycle and the declining phase of its intermediate cycle. It's going to be next to impossible for those banking cartel to hold the suppression of the silver market under those conditions. A silver squeeze imminent. And again, it deals with the currency exchange rate and the value of that dollar. When we drop that dollar, guys, when that dollar up here starts to drop, this one, when it goes, it's gonna send everything higher. Spain equities that we are looking at down here, higher. It's gonna send it. It's gonna send it big. Drilling, higher. Platinum, higher. That's why we've got all these big charts squeezing. It's from the dollar going up and holding them in these patterns. Once that dollar releases, these all release. Dukes. So I was talking about the whole inventory is being depleted. So the Duke count fell rapidly in the second half of 2024 and continued to drop into first quarter of 25 as higher than expected legacy decline rates forced operators to bring more wells online. Capital budget restraint, low Duke levels, low rig count, and well productivity declining further equals flat to decline in oil production. So your drilled uncompleted wells were, I mean, we restocked this back in 2020. From 2020, 2021, we've got declining Dukes. We had a little bit of a surge higher in 22, 23, and now we're declining again. We're eating through that inventory a little bit, a lot of it. Here's Matt Smith. I want to talk about this one here. He says, the biggest economic shift in 50 plus years is happening right now. Nobody's talking about it, but if you're paying attention, the signs are clear. The US dollar is about to be deliberately devalued, and it will change everything. Totally agree there. First, look at what's happening in the gold market. There's a massive run on gold. 30 million ounces have been moved just this year, 10% of the total US reserves. Someone like the Treasury or Fed is buying it all without caring about the price. This is not normal. Why does it matter? Gold has been the foundation of real money for centuries. Whenever there's monetary disorder, gold becomes critical. China has been preparing for this for years, buying gold hand over fist. Now the US is following suit. Something big is coming. The US dollar is too strong. It makes our exports uncompetitive. Countries like China and Japan have cheap currencies, undercutting US industry. The Trump team sees this as currency manipulation, but they plan to flip the script, and here's how. The strategy is a massive, deliberate dollar devaluation. The goal is to make US goods cheaper globally. Tariffs and our security umbrella will force countries like China and Mexico to revalue their currencies. This hasn't been done since 1971 and 1985 Plaza Accord, but it's coming back and it's much bigger. They'll call it the Mar-a-Lago Accord. 6, inflation will skyrocket. Prices of everything will rise. The cost of living will explode. The hope is wages will explode along with expenses. The government wants this. Why? To inflate away debt and restart the system. This explains why sovereign wealth fund is coming. Trump's advisors want to monetize US resources. This is what focusing on the asset side of the balance sheet is all about. Our gold stocks, but also oil, minerals, and land, all used as financial assets directed in a new industrial policy. The government is shifting from spending focused to asset focused. So what happens next? Expect major capital controls to keep money from fleeing the US foreign holders of US debt, and perhaps even stocks could get hit with restriction or fees. A two-tiered dollar system may emerge, internal and external dollar. Believe it or not, the US will be copying some of Chinese economic model. And then number 9, gold is going to rise for a reason, or gold is rising for a reason. It's not the gold is going up, it's the dollar is going down. Based on US-based money, gold should be $21,000 per ounce. We could get there. Gold is the signal, and the smart money is positioning now. 10, what about the Fed? Trump's advisors want to kill the Fed. I think it will fade into the mist of history. What replaces it is likely to be a private stablecoin-backed system like Tether could replace it. A gold-backed digital dollar, CBDC, is coming. The entire monetary order is being reset. So what should you do? Own hard assets, gold, land, real assets. Reduce exposure to U.S. debt. Bonds will get crushed. Prepare for capital controls. Offshore options may get limited. Stay ahead of the shift because the old system is dead. Bottom line, they have a plan to create the biggest financial reset in 50 plus years. The dollar will be devalued. A whole new industrial policy will emerge. Inflation will go up, not down. It must for the US to become competitive again. Gold and hard assets will soar. I explained the details with receipts in an interview earlier this week. The topic is complex, and there it is there. And that's what we've got there for Matt Smith. Got Gold says Chinese banks run out of gold as soaring prices spark buying frenzy. Here we go. This is the run on gold. Here's ABX, Barrick Miners, coiled like a spring, and you can see that we've got that big pattern. Remember that fractal? The fractal where it pulls on and we go all the way to the tip, break through the downtrend or horizontal line, either one, and then we just rip. It's all being set up for these gold and silver mining companies. That is something that I will talk about this weekend. I'm going to go over a whole bunch of different companies, and we're going to look at them, and I'll give you my opinions, and you guys can ask questions about the companies. I haven't really done that, and I think we really should go over the majority of companies that I really like, why I like them, the chart patterns, and what I think is good or bad about the companies. Giovanni DeNovo says an oil market deficit of nearly 1.6 million barrels per day for January if those inventory estimates are not revised next month. So we're eating through inventory, declining commercial inventories at a 1.6 million barrel per day clip. Seasonality of oil and gas equities, a different view on a similar chart. So seasonality of oil and gas equities using the Crude Chronicles Energy Index. They generally go up in the March timeframe. So we go sideways in Feb, and then we go up in March into April. It's generally a big move higher. And then we stay higher for a little while. But here's that cycle that you can see cycling up and down. Now here's Jacob King talking about crypto markets. It says, Tether is the glue holding up the entire crypto market. It has essentially found a loophole to print unlimited unbacked tokens out of thin air, avoid transparency audits, and evade prosecution. However, this is all coming to an end in 2025. Harsh new regulations are on the way, forcing Tether to disclose its U.S. Treasury holdings. JP Morgan and other major banks predict that to comply, Tether will need to sell off its BTC reserves. That leaves them with two choices: sell everything and collapse the Ponzi, or refuse and get busted and banned by authorities. Either way, the scheme unravels. The truth is, Tether has been lying to everyone for years. It doesn't even have 1% of its holdings backed. It printed money out of thin air, injected it into BTC, drove up prices, induced FOMO, and sent the market soaring, all while insiders scalped, sold behind the scenes, and got rich. There's no outcome in which BTC survives. Its current price of around 100K is a temporary blip, sustained purely by fraud and FOMO. When reality sets in, prices will plummet, even back to four-digit levels. Bookmark this, is his opinion. I says, all the maxis say not financial advice after telling you to throw your life savings in at the peak. But I'll take the contrarian approach. This is financial advice. Sell and take profits. The risk is way too high, according to Jacob King. So that's his opinion, what he thinks. I am just sharing that information. I don't know if it will occur. I'm here. I've got my popcorn to watch the show and see if that actually works out that way. The blood indicator hasn't triggered yet. I don't know when it's going to trigger, but it's definitely worth watching. The blood indicator is when you get the 3-month Treasury bill divided by the high yield spread ratio to cross each other. That's where these red circles are, and then usually you get a selling pressure move in the markets of the S&P 500. More new data obliterating the narrative that homebuyer demand has died. So, oh, sorry, I hit the wrong one. It says only 28% of consumers who plan to buy a home in 2024 actually did. Per NAR, first-time homebuyers accounted for only 24% of sales in 2024. Anyone who thinks that the homebuyer demand has dissipated is playing opossum. It is and has been accumulating on the sidelines. And as population ages, there will be more new prospective demand every year, a lot of it, and for a while. That's your demand. And it's not the affordability, it's the demand that keeps piling up. If they can't afford it, it doesn't mean that these people just go poof. It provides a base underneath. It's a floor of buyers at a certain affordability that can purchase. Now, does that mean that home prices have to come down for them to purchase? No, unless there is willing and motivated sellers to do it. If there's inventory to get it down there, which we don't have. So this is sales to first-time homebuyers. You can see it declining. And there it is, first-time homebuyer share declining. But we have a bunch of first-time homebuyers that want to buy. The affordability isn't there. Caleb Thomas says, chart of the week, MEGA. Make European equities great again. A new cyclical bull market is in the beginning. If you've been fixated on the news flow around tariffs and stuck on the old narrative that Europe is doomed, so I'm not going to read through the what he thinks. Euro Stoxx 50 is breaking out. Why is it breaking out? Because of the dollar. Dollar weakness, and the euro's about to break against the dollar is my guess. I didn't look at it recently, but my guess is it's bottoming and starting to turn higher. And people are positioning already for that move. Buckle up, buttercups. I think I already talked about that one last time. So we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website, guys. Special coupon code is active, and we've got a question and answer session going on at 7 a.m. Mountain Time on Saturday. We'll catch you there. See you guys.